everybody was like, oh my gosh, they can't stop Anthony Davis, and they can't, LeBron is almost ready for AARP, and they can't stop him either. And it was just, oh my gosh. But it was a close first game. And then I guess Coach Kerr or Draymond or somebody made some adjustments, and up by 20 or 30 points. What the heck? And Anthony Davis, who was a huge force in the first game and almost unstoppable, was really quieted down the second game. So tomorrow's game, Saturday's game, will be good to watch.
Pivotal game 3. Yeah, these series are always interesting. The momentum seems to kind of shift so much game to game. You can blow a team out one day and the next day come right back and win by 2, and it's all kind of relative in the grand scheme of things.
Yeah, there's been some press about the Warriors Kings, and we're not here to talk about basketball so much, but the Warriors Kings series, and the Kings soundly beat the Warriors at home,
right?
And it's like, oh my gosh, and then there've been several stories about how they rallied back to go back to Sacramento and win again. And just the communication, the teammate communication is very, very good. And Coach, Steve Kerr doing, just changing things around. So, yeah.
Well, welcome everybody into the latest edition of the Rundown here, our Cinco de Mayo edition. So if you're at that time on your Friday, feel free to join us with a cerveza of choice. But in all seriousness, the real celebration of today is Mexico's victory over the French Empire back in 1862, viewed as a pivotal battle in the Mexican army defeat of French. So big weekend coming up here, also Derby Day weekend. So as always, pleasure to have Rob Crispin co-hosting. Rob, where are you joining us from today?
Well, I figured with a banking theme, I had to kind of duplicate not only your vacation theme down in Florida, but also the banking theme. So I am outdoors. I am under a umbrella, but I am at a friend's house who is a bank, does a lot of bank consulting. That's Joe Garrett. So I'm in Joe Garrett's backyard, and as you can see, he has a duplicate. I don't know if you've ever been to the Notre Dame football stadium, but I think there's something called Touchdown Jesus or something in the for the Notre Dame team. So I don't think that's a duplicate, but Joe likes his artwork. So that's where I am in Berkeley, California, Joe Garrett's backyard.
Fantastic. Well, tell Joey say hello. And as you mentioned, I'm a little vacation getaway near a beach in my mini tiki hut on Madeira Beach outside of St. Pete. And we've got 2 esteemed co-hosts with us today. They are not outdoors, but in separate office locations, I believe in the same building. You guys correct me if I'm wrong there, but with a Senior Vice President, Manager of Residential Mortgage, Mike Pulver, and the Operations Manager on the mortgage side, Joe Leone, with Genesee Regional Bank out of Rochester, New York. So Western New York's finest. Mike, Joe, thanks for joining us today.
Thanks for having us. Really excited.
And how far are you guys currently apart in the office?
Maybe about 50 feet down the hall from each other. So, we decided with the banking theme, we'd join from the boring banking office. Right. So, we didn't want to
have this up. Have you gone back to office work entirely 100%?
So interestingly enough, we've been, Mike and myself, our leadership team has been in the office 100% since March of 2020. Just by choice. We are still in a hybrid environment with most of our employees. So 2 days a week in the office, 3 days work from home, partly because we're running out of space in our building, which is also another issue.
Yeah, we actually have no space and we have no parking. So it's working out for us. But I do find that though people are beginning to come back in more, I think that, we have a really, really good team environment, and people enjoy each other's company and like to interact with one another. And I think, one of the things we're trying to do is really kind of get back to, our culture, and, just being around each other helps. So it's great to see when the office is full. It seems like it's most empty on Mondays and Fridays though.
It's got to be
Yeah.
a bit surreal at times to see the office full again and the water
Yeah, it's
cooler
nice.
talk taking place and a little sense of normalcy out there. That's fantastic.
So
I did
well,
see somebody put in the chat, Jenny Cream Ale. Rochester is home to the Genesee Brewery, so we like our cream ales here. Sure.
very good. So are you running out of space because the bank is doing well? Because the mortgage is doing well? Because other tenants are gobbling up space? Why are you running out of parking and office space?
So we are in our own building, but we have grown very quickly as a bank, and partly due to mortgage, partly due to our commercial team as well. But we have quickly gone from, I think, 60 employees when we started at this location to over 170 employees now. So, and that was within a 5-year time span. So it's been a quick growth, and kind of have outgrown more the parking lot than the building itself, because there's only room for so many cars. So it's a good problem to have.
I was
There you
going to
go.
ask Joe, is it in part too, just due to kind of the hot mortgage market? That article you were sending me earlier today in Rochester right now, is that having an impact on office space?
I wish I could say it did, because as hot as the market is in Rochester, New York, we are bobbing and weaving every day, trying to make every deal happen. Rochester, 2 months in a row, has been named the hottest market in the United States, with 2.6 times the amount of views online. So with very limited inventory. So the buyer demand is there, and it's great. Not so great for our credit report bills. If our credit reporting company is, I know Tracy tends to frequent this show. It's been good for them, the buyer demand that we've seen, but we're really feeling it with the increased cost of credit reports for sure.
So I wanted to ask you about business in general and about hiring and staffing. So a few weeks ago, I was at the MBA Stratmore peer group meeting, and it was about for small and mid-sized independent mortgage bankers, IMBs, not depositories. And they had just had a session a few days earlier involving small and mid-sized depository banks and credit unions. And the people who attended both sessions agreed that the banking session morale over that day and a half was head and shoulders above that of the IMB mood. And that is because banks didn't necessarily staff up significantly during 2020 and 2021, and now aren't having to lay people off. And in fact, any excess people that they might have are being shifted to credit cards or boat loans or car loans or other areas of the bank. Can you guys talk a little bit about staffing over the last few years and what's going on now?
Sure. I mean, Rob, and I know Joe can pick up on this. I mean, it really comes in part because we've always never strayed from just sticking to a purchase money strategy and never really got lulled into relying on refis. And I think, even at the, when rates were in the threes, for several years, we really never got above probably 25 to 30% refi during those times. And you could certainly suggest that maybe we left some business on the table at that time because of that. But in the same vein, it's really served us well, because to your point, we did not staff up. And as a result, we haven't had to staff down. As a matter of fact, we haven't had any layoffs. In our volume, although we're off about 15% this year. To your point, we did recently take on the home equity business that we didn't have in the past, and Joe and his team have been able, to seamlessly take that on and move that from the consumer lending part of the bank down to mortgage, and it's been a win for both of us. I mean, that being said, we could do more business with the folks that we have. We're probably running at about 80 to maybe 90% of the capacity that we have. So we definitely need to be doing more. But in the same vein, we're not faced with having to lay off folks, which is, to your point, has been really good for, office morale.
Well, that's very good. The banks have obviously been in the news recently.
Yeah.
Uh, much to the shock of stockholders around the world who own stock in some of these smaller banks, community banks or regional banks, really taking it on the chin. It seems like for a while, bank news died down quite a bit. And then up pops, PacWest or First Alliance or Western Alliance. Who owns your bank? And to the extent that you can,
Sure.
can you talk a little bit about, concerns that you might have,
Sure.
or deposits doing
Sure.
okay kind of thing?
Yeah, sure. So we are privately held. So there are mostly there's 12 shareholders in the bank. But in regards to managing the bank, we actually had a meeting today to where we get really granular on banking deposits, and we actually stratify them by size, business, consumer. And I think one of the things that we're fortunate in being small, because we're about $1 billion in assets, Rob, and we have about 6,000 clients, and we're able to really reach out to each of them and have a discussion because we have a personal relationship with them. Many of them have a business loan with us, they have a mortgage with us. So we're able to just have a much more personal relationship with them, where I think the larger you get, it just gets harder, to do that. So we have been relatively, flat. We haven't seen a big outflow, but I think it's been a result of, one, we have had to increase, the rates that we, pay. There's no longer the term, these lazy deposits, where you could just lease someone a loan and they would never bother you when you were paying them, 0.1%. We've had to be more proactive and say, you know what, yes, we can pay you more on that. And in lieu of them coming to us, we're trying to go to them because we have a longer term relationship. So knock on wood, we've been doing well in that regard. It doesn't mean that we're not concerned about it. And it's just something that every single week we get into the weeds and really look at our inflows, our outflows, and really try to make sure, are there any trends going on? And it's something that we got to pay really close attention to.
Yeah, it's a real issue. And C. Morse wrote saying that the PacWest stock is up dramatically
Checking
today.
that Western Alliance as well, and First Horizon about even today.
Yeah, it's I don't know. I've talked about my investment strategy before on the show. I'm a buy and hold kind of person, and I don't get too carried away with. I can't predict the future or what stock is going to do from one day to the next, but I know in general people need to put their money somewhere. So in terms of banking stocks, owning banking stocks, or should I sell my should I sell my Wells Fargo stock today because it's going to go down more? Well, I don't know. I just kind of sit on it, but I would imagine that over time, the banks, whatever banks have gone down in value in terms of stock price, I imagine they'll rebound. And the bank stocks typically aren't known for their volatility. So I think that some of the short sellers perhaps have come into the market and are shorting some of these stocks, and that doesn't help. Things from a long-term perspective. They're looking for a short-term gain, and other people are looking for a place to own a little tiny piece of a bank because banks are relatively stable. But in terms of the bank environment, And I heard an interesting term recently. Somebody said, oh, it's not called cross-selling anymore. It's called relationship deepening. Um, some years ago, Wells Fargo got smacked for some of their efforts in terms of quote cross-selling. But if done appropriately, I would think that would be a very valuable source of business for the bank. Can you talk about how you guys have approached that kind of business channel from your depositors?
So from a cross-sell perspective, I think we've done a fair job of that. And Rob, we don't have frankly as much to cross-sell. So what I mean by that is we're a pretty traditional bank in that we do mortgages, commercial lending, and the retail banking that we do. We only have a handful of branches. So where we have cross-sold is, we did develop a mortgage rewards program to where for every closed loan client that we have, we pick up the phone, we call them, and we give them incentives to open up accounts with us. We've had modest success with that, but where we are beginning to pick up steam is we're seeing a tremendous increase in interest in lines of credit. I mean, the home equity business that we do has really picked up quite a bit. And I think in part because frankly, when Joe and his team took that over, they were able to, really just provide an amazing client experience. And now we're about to, look at it every time that we are underwriting a first mortgage, we're going to pre-approve them for a HELOC. So we're trying to do those two things at the same time. But from a cross-sell perspective, I think we've done well with it to the extent to what we offer. And Joe, I don't know if you would add anything, to that, because we don't do car loans, we don't do boat lending, so it's limited in regards to what we can cross-sell.
Yeah, no, I think you hit it on the head. A lot of our cross-sell opportunities comes from our business or commercial clients, right? They're actually, that's how we started lending in Florida, right? We had some commercial clients that wanted to buy a second home down in Florida and said, well, we're licensed down there, we can do it. And we did. And, I think it's those opportunities that, again, like you said, deepen the relationships just naturally or organically.
Well, while we were chatting or while you were chatting, Crystal Templeton asked, how is commercial lending being impacted by the current market? Is your LMI business a core focus? I don't even know what LMI is. What is LMI?
Low to moderate income.
Oh,
I would
yeah.
say, so Rob, I can address, so from a commercial perspective, I think what the team is doing is they are taking a more cautious stance because, the cost of funding loans has gone up. You no longer have cheap deposits. We have to go to the Fed window if we just don't have the deposits to do that. And we're also waiting for a lot of these loans to reprice. So we're really being a little bit more selective in the new loans that we put on the books, because we want to ensure that they're priced correctly and that we're not compromising credit. So the loan demand has softened a bit, and I think it's really from the standpoint that if we just sustain the level of loans that we have on our books and maintain credit quality, the bank is going to be pleased with that. And if we have to pass on certain loans because they just don't fit where we want to price or what we want to do from a credit perspective, we're just going to let those loans go. And from an LMI perspective, I think we're doing a great job with that. Again, Joe and his team, we participate in a program here in New York called the Home Buyer Dream Program. It's done in conjunction with the Federal Home Loan Bank. Eligible borrowers can get up to $10 $100,000 towards the purchase of a new home. And Joe, correct me if I'm wrong, I mean, we've been the #1 home buyer dream lender in the entire Federal Home Loan Bank system of New York, I think for what, 3 years?
Yeah,
4
3
years?
years in a row. Yeah.
Yeah. So, I think we've done a real good job with that as well.
So the Federal Home Loan Bank just gives the buyer 10 grand?
Yep, it's a forgivable grant of $10,000. 9,500 goes towards purchase and closing costs. 500 goes towards defraying the counseling costs to the nonprofit. And they have to be first-time home buyer and under the income limits. And if they are, they can get a grant for $10,000. The difficulty is getting under contract, right? Getting that contract accepted that's subject to a grant. But it's fully forgiven over 5 years. So it's a great program for the borrower themselves.
So where does the Federal Home Loan Bank, going off topic here slightly, where do they get the money?
So they allocate a portion of their profits every year to affordable housing, and it comes out of that pool.
I see. Well, that is a good program. And are independent mortgage banks able to do that as well? I guess not so much because you're dealing with the Federal Home Loan Bank.
No,
Correct, yeah.
unfortunately, no, you have to be a member of the Federal Home Loan Bank.
All right. Now, let's go back a year. And we started off 2022, rates were relatively low. Nobody predicted that rates would shoot up like they did. At least I don't remember any of the people that you normally hear predicting rates were thinking rates were going to shoot up as fast as they did. Banks and credit unions did very well initially because of the yield curve. The yield curve steepened, and the ARM market, intermediate ARMs, 3-1s, 5-1s, 7-1s, looked very, very good relative to 30-year fixed rate or even 15-year fixed rates. So a lot of intermediate ARM business, or a lot of business, went that way, and independent mortgage banks were upset, as independent mortgage bankers tend to be, about the where are we going to get an ARM program to match the banks and credit unions who are offering these great rates compared to 30-year fixed rates? Are you guys doing any more? Is intermediate ARM production even on your radar screen anymore, or has it virtually vanished for a while?
It's been gone for a while. I think actually, where we see the competition on the ARMs is those banks that didn't get their fill yet. We have some of our competitors that are still out there offering a 5 1/4 on a 10-year ARM. And you kind of scratch your head, because with the cost of funds, what are you doing? And are you creating another one of these situations like a First Republic Bank, where your money's tied up in long-term debt? And so it'll be interesting to see when that appetite slows down. But for us as an institution, we kind of had our fill of it. And I've been hearing a lot of that through actually the collab labs that we did this week. A lot of people were talking about, what are you doing now that you're shifting away from portfolio lending, that your CFOs are coming back saying, hey, we can't take on much more of this ARM business.
Yeah.
Yeah, Rob, I would just add to that. One of the things that we are seeing is, because we as a bank, we have a limited amount of portfolio lending that we can do, and our CFO is pretty specific about what he wants to do and what he won't do. And what we find right now is that the credit unions that we compete against, I think because of their model, it seems like the credit union has not come up in the conversation at all around banking issues, concern. They seem to be kind of unscathed in all of this. And again, when you think about it, some of these credit unions that we compete against have 200,000, 300,000, 400,000 members, and most of those depositors keep a more modest sum in the bank and aren't demanding the higher rates on their checking and their savings. So these credit unions can put the money out at a lower rate than we can. So where we're struggling in certain areas is, to Joe's point, we're losing loans to credit unions that still are pricing, their 5, 7, 10 ones in the high fours to, low fives, and I'm selling a 6.25, 30-year fixed. So we do feel that pain.
Well, everybody here for the Friday Cinco de Mayo edition of the Rundown. We've got Joe Leone and Mike Pulver with Genesee Regional Bank joining us today. Joe, you mentioned it just a moment ago, and some love in the chat. Lisa Walls from Partners Credit sending their love for Genesee Regional. Shane DeSimone saying a long time hello to you, Mike.
Yep.
But Joe, you mentioned it just in the last comments, just about the TMC virtual labs, collab labs you guys are starting to engage in this week. With your community bank group, without giving away specifics, is there any high level themes in particular that you're really excited about to be discussing with your peers?
Yeah, I mean, I think right now, a big focus for a lot of people is as it's a little slower, in other parts is technology, right? What do you have the right technology stack? Several of our members were going through onboarding with a new LOS or POS, and going through that process now. So that's been a big process. And I think, really efficiencies, what are people doing with staffing? That's been a common topic. It was a common topic when we were in San Diego as well. And I think it's just, everybody's trying to get better, right? And I think that's one thing that we always talk about is how do we get better, not only in how we do things, but what are we using to do that? And, with the cost of origination so high as it is, you could almost get caught with all these different technologies and all these different options out there that are supposed to increase efficiency and reduce costs. But as you stack them on, if you lose that scale, you kind of lose that profitability as well. So it's kind of hitting the reset button on some of that stuff.
It's
We talk about that a
really
lot frequently. Yeah. Just that free flow of data between your tech systems, and not just, chasing after the latest silver bullet. That we call it a Frankenstack, if you will, when you layer all these solutions on top of one another and they don't play nice.
Right.
Yeah, it's really and yeah, Tom, you kind of took the words right out of my mouth. Is you really have to, when you're looking at a new system, how much is it? How long does it take to roll out? Does it play nicely with other things that you have in place? And it's a real head scratcher how the cost of production is, up over $12,000 alone. And when you are selling those loans in the secondary market, unless you're playing games with the value of the servicing, pretty much everybody's loan level price adjustments are the same. The MBS market is the same for everybody. It goes back to the cost to produce a loan. And if you're below average, you're gonna come out ahead because you're selling it for about the same price or valuing it for about the same price as everybody else. So to the extent that you can originate loans at a much lower price, it's a huge benefit. And it seems like the pay structure for originators is often different at a bank or credit union versus an IMB. Maybe bank LOs don't make a point or a point and a half a loan. I don't think credit union originators make a point or point and a half per loan. And so there's a built-in profit margin advantage that banks and credit unions have because of that pay structure. So, but with regard to technology, yeah, I hear great things about the TMC collab labs and the flow of information and what works and what doesn't work and who's doing what. I think it's a big benefit to hear other people talk about things that work, technology that is a benefit versus, they came close, but they missed it this time kind of thing. So congrats on the collab labs.
Yeah, I'd be interested to hear you guys' insights as I go through that exercise. And I know we were talking about events. It's Derby weekend for horse racing fans. So those in the chat, feel free to drop your picks for tomorrow's race. I'm going with 2 fills, 12-1 odds. But speaking of events, you guys have a big time event coming to Rochester 2 weeks from now, the PGA Championship for the fourth time. Tell us about that. Is that a big boon to the local economy for Rochester?
Yeah, it is. We're super pumped about it. I mean, it's obviously we were bummed that Tiger dropped out. He's always a massive draw, but that being said, everyone else is going to be here. I mean, it's going to be a who's who. And article here that appeared in the Rochester Business Journal was that I don't know how they came up with this figure, Tom, but they're saying it's supposed to bring in 200 million into the local community. That seems a little large, but to the extent that happens, that'll be awesome. I know it's going to be really hard to get a reservation at a restaurant when all these folks are in town, but we will be involved, and actually Joe and I, Joe, I don't think I even told you this, but Phil, who's our CEO, is a member there. And Joe and I do a monthly podcast, the market update with Mike and Joe, and looks like we're going to do it live from the PGA at Oak Hill. So do chime in. We're going to wear the GRB bucket hats. It's a new look we got going. So we're going to film that next week right at Oak Hill, and we're excited about it. So
I love it. You guys got to get a celeb cameo from one of the players out there. But I always enjoy watching your monthly mortgage market updates. We will definitely drop that, if not in the chat for our audience, certainly in the follow-up email so they can follow you guys. I know I'll be watching that the PGA Championship episode. But we got a couple minutes left here on the rundown. I mean, a lot of top headlines in the week. I'll leave it up to you guys what we want to close talking about. It could be the Fed's 25 point rate hike, the latest legislative efforts to sway FHFA to scrap the LLPA-DTI pricing hits, jobs report, economic data, or federal government standoff towards debt ceiling, or Rob, how about your favorite, Chat GPT, getting the latest release and a new plugin in Zillow, so you can tell Zillow what you want to find in a house, and it generates some local listings for you.
You stole my lead off for Monday morning, Monday morning's commentary, because yesterday I was in Cody, Wyoming, speaking to a group, and Ken Perry was there from the Knowledge Coop, and Ken's a huge Chat GPT fan. I don't know if he's a fan or not, but the things that he was telling the audience are downright frightening in terms of just the ability for computers to do certain things. And people started talking about the Terminator and the ability for that whole genre of movie where computers learn and eventually can do some pretty bad things. And so he was plugging my commentary into his Chat GPT thing and coming up with different ways of saying kind of the same thing. But I will stand here today and say that Chat GPT or GTP, whatever the heck it's called, will never write my daily commentary. Anyway, but I'm sure, I know that Redfin and Zillow, it's like here to stay. I'm kind of hoping, as you know, I'm a little bit of a technology Luddite, frankly. And I remember when the computer first beat, I think, a Russian chess champion way back when, and everyone said, "Oh, well, that's this just the decline of human intelligence, and the computers are going to run the world pretty soon." And it didn't happen right away, but once again, we're kind of stepping in that direction, and it's not great. But anyway, regarding the jobs number, Tom, my opinion. It's hard to have much of a recession when unemployment continues to be really low and hourly earnings are doing okay. And the trends are, you can pick apart the numbers, but the jobs data this morning that came out was, it's good. The job market is strong.
Yeah, 269,000 or 296,000 April jobs gains, largely on the leisure hospitality side, which you always point to as a sign of a strong economy when people are out and about and continuing to
And
spend.
they're waiting on you, Tom. They had to staff up for your visit to Florida.
That's right. I tell you what, I did think it was interesting. The ADP chief economist in that release put, employers are hiring aggressively, growing sectors, but then holding back on pay gains as they're starting to see more workers come in off the sidelines, and also seeing less people switching jobs, which, maybe a byproduct of post-pandemic life where people starting to settle back in, to your guys' point, getting more back into the office and a little more of a sense of normalcy out there. But you're right, Rob. When unemployment's still hovering around 3.5%, it's really hard to fathom a national recession.
Yeah.
Yeah, I think the one number that caught my eye was just the job openings continues to drop a little bit. Down 384,000 again. It's down 1.6 million from December. I think that's the piece that, if it gets down to where that level that they're comfortable at, I think it's 7 million is the historical number that they're comfortable being at. That number, that could have some changes to things. And I think the one interesting part that I keep seeing is the 10-year. I mean, it seems like we take 2 steps forward, 2 steps back every other week, and the spreads just remain high. So it's be interesting to continue watching.
Right. Some great commentary from our friend Steve Richmond about Chat GPT, and that it can't currently generate your daily commentary, but nobody could, to be honest.
Oh, we don't have to go down that path.
And
Steve,
then audience want to know your thoughts on your boy Barry Habib's prediction to mark your calendar for May 10th that lower mortgage rates are to follow.
What's going on, Tom? I don't follow that. What's he saying?
Basically that to mark your calendars for May the 10th, that we'll be seeing lower mortgage rates to follow. I'm not sure that I follow if there's a significance to, would that be next Wednesday?
Barry Habib has a prediction on the core price index coming out next Wednesday, because it'll be year-over-year numbers. And, it was higher last year, so it's going to start to come down at this point.
Well, sure. I mean, that happens all the time, anytime, because when you start taking those higher numbers out from a year ago, it's an easy prediction to make that it's going to year over year be, the number will be lower, but, good.
Yeah.
Good for him.
Well,
that's what we're all hoping for.
That's right. Downward trend. But Joe, Mike, I know what you guys are going to be doing in 2 weekends from now. Any fun plans for this upcoming weekend?
I am playing in a Derby Day golf event tomorrow, followed by a Derby party.
Do you have a Derby sport coat, or?
I got the full getup. I got the whole deal. My wife's got the hat, the fascinator, the whole bit. So the mint juleps will be flowing, and I'm going to do some research tonight on who I should bet on. I'm wondering though, if I should use one of the betting apps to bet, or just go old school and just
I go old school for an event like this. I actually tried to use one of the betting apps, and because it picks up on my location in Florida, I am restricted by state laws for participating. So
that's right. Okay, good point, Tom.
You're gonna have to go to the track, Mike.
Okay.
The old-fashioned way. That's right.
You have to bet. That's half the fun.
Rob, what about you? You're going to be doing anything fun for King Charles's coronation at 5 a.m. Eastern, probably 2 a.m. your time?
I hope to be sleeping, which, as Tom, you'll find out as you get older and older, a good night's sleep gets harder and harder to get. But I might have a margarita or two later today, and then going to play some basketball tomorrow morning and watch some basketball tomorrow afternoon or evening, I should say.
There you go. And Mike, so Shane advises asking Chat GPT who will win tomorrow. On that note, until Chat GPT comes back to replace us in human form to do the rundowns on Friday, we'll call it for this one, and look forward to seeing you next Friday when we'll have Vice Capital Markets Chris Bennett in the house. Should have some great economic and secondary capital markets insights. So Joe, Mike, a lot of love in the chat, particularly from your TMC favorite, Ashley Alexander, and Ira sending his love. We certainly appreciate you guys joining, and thanks so much. And have a great weekend.
All right,
Thanks. Have a
guys.
great
Thanks, you
weekend.
too, Tom.
See you
Enjoy
guys.
Florida.
Okay,
Bye, guys.
peace.
Will do.
Take care.